Do you feel that? That knot in your stomach every time you open your brokerage app and see those red candles flickering like a warning light? If you are over 30, you've lived through enough market cycles to know that the euphoria of a bull run can vanish in a single afternoon. In March 2026, the world is louder, faster, and more unpredictable than ever. Between the AI-driven tech swings and shifting interest rate narratives, if you are sitting on a portfolio that is 100% aggressive growth right now, you are standing in the middle of a lightning storm holding a metal rod. But listen to me closely. Being safe doesn't mean hiding your cash under a mattress while inflation eats it alive. That's not the evolutive way. In 2026, safety isn't about doing nothing, it's about strategic defense. It's about owning the beta giants that the big institutional money hides in. Today, I am going to show you my top 3 safety ETFs, the fortresses that will allow you to stay in the game and sleep through the night. Let's start with the fundamental problem of March 2026. Most people think diversification means owning 10 different tech stocks. That is a lie. To survive this volatility, you need to understand beta. Beta measures how much a stock moves compared to the overall market. Our first pillar of defense is the Invesco S&P 500 Low Volatility ETF SPLV. It is the financial equivalent of a bulletproof vest. In March 2026, this means you are heavily weighted in utilities, consumer staples, and healthcare. These companies care about necessity, not hype. When the market starts to slide, SPLV acts like a parachute. It ensures you don't lose 50% in a single month. Let's take a necessary pause here. Here at Evolutive Productive, we don't believe in luck. We believe in being structural in our thinking. If you value this direct approach, subscribe right now. Hit that notification bell so you don't miss our defensive blueprints. The second safety ETF is a personal favorite, the Vanguard Dividend Appreciation ETF, VIG. This is a quality fund. In March 2026, VIG is your quality shield. It holds giants like Microsoft, United Health, and Visa. These are companies with pricing power. VIG gives you the best of both worlds. It captures market growth, but does so with a much smoother ride. Our third and final defensive pick for this month is a bit more tactical, the Schwab US Dividend Equity ETF, SCHD. In March 2026, income is one of the most powerful forms of defense. Receiving a cash dividend every quarter is the psychological glue. SCHD filters out the garbage and leaves you with the cash cows of corporate America. This creates a self-healing portfolio. So, how do you use these 3 giants? As your mentor, I recommend a layered defense strategy. Use SPLV as your primary bunker, VIG as your growth engine with a safety net, and SCHD as your cash flow generator. In March 2026, the market is punishing the arrogant and rewarding the prepared. You don't need to make the most money in a single week. You need to be the person who is still standing and still profitable in a decade. That is the definition of productive investing. The era of easy money is in the rearview mirror. Take a look at your portfolio today and look for the safety in your holdings. Start your evolution today. Move that capital into one of these 3 fortresses. Give yourself the gift of a smooth ride. If you want to see exactly how I am weighting these 3 ETFs, I've put together a breakdown in the video on the screen. Watch it now. This is Evolutive, Productive. Stay focused, stay defensive, evolve.